Welcome to the Silent Trading channel. Today I'll be analyzing the gold chart on Wednesday, the 11th of February. And first thing first, before I go on, please subscribe, like, comment and share if you like this video to support me in my trading journal and to support me in my guiding you guys on how I trade based on price action and human psychology, right? So right now we'll be starting on a 4-hour candle or the 4-hour time frame. As you can see at a 4-hour time frame, the price or the chart has created a lower high and a lower low, right? But a lower high isn't sufficient yet, because why? Because this is a lower high, this is a lower high, right? Support are created higher and higher, but resistance isn't created higher and higher yet, because the lower high, a lower low, the high, no, once more. The higher lows are created, but the higher high isn't created yet, because the chart managed to push up but wasn't able to break this resistance and then start going on a sideway, right? A sideway means market is accumulating volumes from either both sides or pressuring volumes from either both sides to close their position, right? So when the price is in a sideway phase, it is either creating support and resistance to accumulate buy or sell volumes when it breaks out, or it is in a sideway phase to pressure buyers and holders from both sides to close their position before price can push up further or dump further, right? So at least right now we see that the price, after accumulating for some time, has already break above and then managed to break resistance, right? So we'll zoom in to watch at the current price range. The latest candle or the previous candle managed to push up and then break resistance over here, and then break what? Break the higher wick, which is also resistance, and managed to close a candle above both resistance here and here, which means the candle or the market is right now producing a bullish price action for us to see and for us to anticipate that the price is now going to push up further. But before pushing up further, the price needs to what? The price either could push down to clear off buy volumes or to pressure buyers into closing their position and then start pulling back and pushing back up and then pushing up, or the market can start directly push up, right? Expand upwards and then create a reversal above, or either close candle above and then the next candle, right? The next candle and the wick creation of the next candle will push down to clear off what? To clear off buy volume, right? So the market is right now going in an upside direction, but we need to be able to understand whether the market is going to go up further and further, or the market is just going to go up, right? The market is just going to go up and then start consolidating or sideways, right, before going up further or before pushing down. Because you guys need to know something that the market always does is, before going up, the market needs to make sure there are no buyers in this zone over here. If the market is going down, the market needs to be making sure there are no sellers, right? So the market is always on the lookout for both buyers and sellers, and then the market is always on the run to clear off buyers and sellers. If the market is going to go on a trend upwards, it needs to be able to clear off buyers first, right? It needs to be able to, I'll say eliminate buyers or eliminate buy volumes for the market before the market can go up, which means sometimes the market needs to be able to dump, right? And a sharp dump on the price and a sharp dump on the chart to then start reversing once more, right? And then create a higher low and higher high and then start pushing up again. Which means right now we need to be able to focus on the market about what it is gonna do, right? So if the current situation of the market, there is no resistance over here, there is no resistance over here, right? Because the 4-hour candle has already break this resistance, which means this resistance is not in use right now. So we need to be able to look at the next resistance is where? It is here, it is here, it is here, right? And up further, it is the 5,300 resistance. But there is another resistance above this resistance over here is the 5,100, the 5,200, and the 5,300, which is all psychological resistance, and the price needs to be able to break all this resistance to be able to push up further. And right now the price is hovering between 5,100, pushing up, right, pushing up, and then pushing down, which means right now the chart is also in a sideways phase in the lower time frame, right, because it is now accumulating buy and sell volume at the 5,100 resistance, right, because if the white 5,100 is above, it is called resistance. If the 5,100 is below, it is called support, which means right now it is a resistance that the 4-hour candle needs to be able to break, right? Breaking means the 4-hour candle must close above this 5,100 resistance to be able to push up further, because we need to know what the chart is doing. And right now the chart has already pushed up and then pull back, push down and then pull back, right? Because it is still in the phase of clearing off both buyers and sellers, and at least until it has cleared enough, the price will start pushing up. And if the price start pushing up, we will then look at the next resistance over here, and over here, right? But now we are not looking at any resistance except here. Because why? Because resistance and support are strong if the market hasn't come to that resistance and support yet. But this 5,100 resistance has been crossed over multiple times right now by this 4-hour candle, because it has both push up and then push down and then push up and then push down, right? Which means this resistance is now being used as a running track. What is a running track? A zigzag running track, because the price is pushing up, pushing down, pushing up, pushing down, which means this resistance is no longer strong enough to hold on, and the price is looking to either break above or break below. If it is looking to break below, it is a break below to clear off volume before pushing up again. But if it directly break above or expand above, which means there are sellers waiting to sell, and the price is gonna what? It's gonna push up to pressure sellers into closing the position, right? So right now we need to wait for the right price action to enter, because it is too slow to be entering. Because why? Because we should be entering at this bottom wick over here when the price managed to break resistance, right? And this bottom wick was created for us to enter a trade, and once it push up, we will be closing a trade. But if you're not present at the chart at the moment that this candle was created, this lower candle was created, we are not going to enter a trade right now, because we don't know where the chart is going to move to. So we are not entering any trade right now until this candle close above 5,100, or at the very least push up to close above this resistance. If this candle is able to close above this resistance, the next candle bottom wick creation is where I'm gonna be buying. So if the next candle is pushing down to create a bottom wick, it is where I'm buying only if this present candle close above this resistance, right? Because it is producing a bullish price action by breaking resistance. So a bullish price action means trading on the buy side, right? Means the buyers is still on the buy side, at least until it create a reversal. That is how I'm gonna trade. I'm not gonna trade based on my wild speculation. I'm not gonna trade based on my emotion. I'm not gonna trade based on what I want. I trade based on what the chart, what the market wants to show me, and what the market wants to do, and I trade according and following the market's direction. But I'm never going to be following the market's direction accurately every time, but we will be following the market's trail. What it is doing. If it is clearing off buyers from the market, we are going to buy. If it is clearing off sellers from the market, we are going to sell. Because the market always has a way of clearing off buyers and sellers, and we will be entering after the market has cleared off enough buyers and sellers, right? So this is all for today that I'm analyzing. So beware, be careful, right? Always be cautious of your surrounding. Always be cautious of what the chart is telling you. Don't fall for the chart's trick, and don't fall for what it is tricking you into doing, right? Look at the chart and analyze based on real price action. Don't analyze based on what your emotion want the charts to do, right? Don't be biased on your own emotion. Follow the market's bias, not your own bias. Okay. So for today, that's all I'm gonna say. And please stay tuned to my video tomorrow. I'll be revealing more and more of my information, more and more of my knowledge for you guys to see. So stay tuned. And for today, I'll be seeing you guys. See ya.